हेलो फ्रेंड्स, गुड मॉर्निंग। वेरी वार्म वेलकम टू अनदर वीडियो विद एसडी। मैं हूं एसडी शानंद उदास, मल्टी एसेट ट्रेडिंग एंड इन्वेस्टमेंट स्पेशलिस्ट। टुडे इज गांधी जयंती, 2nd of October. Many best wishes to from my side to you and your family. It is also a very important day for us who are Bengalis. Today was Mohalaya. So Mohalaya is the first day, Devi Bodhon. We will start welcoming Devi Durga. This is our most treasured festival throughout the year. So obviously during this period, activity in my trading usually tends to come down. I tend to enjoy more, especially from the 5 to 10. This is the 10-day puja. From 5 to 5th day to the 10th day is the most important. That time we spend more time with friends, families, and enjoying partying and hopping around pandals. So I mean, I'm not sure how my video is going to be. This is going to be the first Durga Puja since I started the YouTube channel. But in the meantime, while this puja is coming up and I want to move into holiday mood, but some things, very important things are happening throughout the world. Especially three important events have hit us directly, and I thought it would be a good idea on this holiday to discuss on this topic. So this video is about global macro and the current state of the markets, different markets, all the markets probably I'm going to discuss in this, looking through my fountain of gold. But before that, I'm going to look at some macro discussion. What's it going on? What do I think and how the sentiment and everything is playing out, a holistic video kind of you can think of. So let's start because it is, I think, once I start off, it is going to be a bit of longer video. So this is where we are. This is what we started last night. I condemn any kind of war. This war is very bad, whether it's you are for Israel or you're for whichever country you are, I don't care. War is very bad. It whoever started it, whoever responsible, it's ultimately geopolitical decisions, political decisions, and the highest price paid by the people who actually do not want the war. So any kind of war we should always condemn, but they keep on happening and they have implications for financial markets. So this is a war between Israel and the kind of Middle East is spreading. We'll have to go to the map. Say I'll type Israel. Israel I have typed. So I'll go to map and you'll understand where what the situation was. Israel was attacked, a terrorist attack by Hamas. And since then, Israel has actually been constantly responding after the attack through these Gaza strips, where Palestinian occupation is there. So there are some criticism from international community that Israel has been too strict towards this Gaza, but somewhat they have shown, um, they have constantly shown a determination after especially the last terrorist attack. If you don't know about the terrorist attack, you can simply search it: terrorist attack, Hamas, Israel. Here, that's it. So this is October 7th. This is the one I'm talking about. Of 2023 Hamas-led attack in Israel. Since then, the situation has heated up significantly and it is gradually spreading. You know, I've been closely watching this for a very long time. The geopolitics, do have those who are associated with me, those who are, but I don't need to look at the everyday this massacre that is going on. I don't like it, like reading about them. Rather, we can focus on the data side and understand the impact. So this is the Gaza Strip, and what we are problem now we are having is after the Gaza Strip, the Hezbollah has started firing towards Israel. As it did, then Israel has attacked Beirut. Beirut area, Beirut it means Lebanon. Israel has significantly attacked, and since the hit by Hezbollah, Israel has taken out some of the top leaders of Hezbollah community. If you don't know who is Hezbollah, so Hezbollah is an organization now. For some is designated Lebanese Shiite political party, and some are militant group. They call it. Some will describe them as militant. I will not describe them as anything, because whoever is militant or what, it depends on a historical context in a much longer period. So we don't want to get into those debate. But Hezbollah is one party over an Islamic Shia Islamist party that, in response to Israel's Gaza Strip conflict, where Israel invaded this Gaza Strip and has been more ruthless towards this Gaza Strip, while taking on Hamas, and from Hamas now it has moved to Hezbollah. Now, what Hezbollah leader, now Israel was successful in killing. Yeah, this is Hassan Nasrallah, Hezbollah leader Hassan Nasrallah. This was killed in severe Israeli airstrike. So he was one of the top-notch leader in one in Hezbollah, and obviously he was quite respected throughout the community. And more important now, this person Nasrallah was close friend, and obviously since he has been leader of an important, a significant political party in the region, he will have significant ties with different leaders. Now, he was a friend of Iran's supreme leader, Ayatollah Al-Khamenei. I don't think I have spelled it wrong. Iran's supreme leader is Ayatollah Ali Khamenei. Sorry, Ali Khamenei. If I'm wrong, there is Ayatollah Ali Khamenei. Yeah, I'm right. Ali, I missed. Ayatollah Ali Khamenei. He is the leader of Iran's supreme leader, as you can see, the religious guide, and very important person. And he was a friend, close friend to Nasrallah, and Iran has always been critic of Israel. And now we have arrived what we had last night. There was ballistic missile launches from side of Iran at night. As you can see, hundreds of ballistic missiles from Tehran moved towards Israel, Tel Aviv. And Tel Aviv, if you don't know where it is, we can have a look at. You can just type Tel Aviv. Here, Tel Aviv, that is Israel. That is the center of all. So, targeting the Tel Aviv, in Israel part, their attack was launched from Iran, ballistic missile attacks. And Israel has one of the world's most advanced air defense system against such missiles. And Israel was able to intercept majority of the missiles, but still some of them did some damage. And after that, the immediate reaction from Netanyahu, who is the leader or leading Israel in this time. So Benjamin Netanyahu directly threatened that Israel is going to respond at certain time in future when that time is appropriate towards this Tehran attack. So now we were initially involved in this small strip, Israel, this Hamas Gaza Strip. This is the small Jerusalem, Gaza, West Bank. From this we spread to Lebanon, and from now Lebanon to we have spread to Iran as well. And President Putin, very rushed last night, it was probably a sign what we were looking at Russia, President Putin was heading for an emergency meeting. So this was probably expected. This attack is going to happen. And now both the international community is asking the parties to calm down. Now ball is in Israel courts to some extent. He say if it responds, then we can get into much bigger conflict. Now what we have here, the region significantly has heated up. Now the problem is what we had at three areas I said I'm looking for which can cause major market crash and global recession. I was looking for three factors. Each one of them has potential to cause, or each three of them will together will form some storm and will have a crisis. And I think these are all connected because this has been happening, this Red Sea channel, the Houthi rebels group has been attacking and the number of ships passing through this region has significantly fallen. This region, Red Sea area, remains heated up. Sudan is an area where it is heated up. Libya has more destabilized than it before, but Libya is still better right now. But this is an area which is heated up. Now from Israel to Iran, we have heated up situation in this whole area. In addition to that, we have Black Sea, Russia-Ukraine war is going on. So these whole area of this in the world remains involved in a major conflict. And this can spread, this can even spread further depending on who are the countries will get involved in further conflict. I don't think this is the end of it. This is this geopolitical crisis, this simmers like first attack, everything started from October 7. And after October 7, we have gradually passing almost 1 year and it's heating up. So, and more, even Russia-Ukraine space is heating up with Ukraine. Now warfare is moving into drones. Here also Houthi rebels with their drone boat attacks, they have stopped majority of the traffic. So this is one area, one of the factors that I say geopolitics has heated up. This is the situation. Is it enough to cause the major crash? Not yet, first of all, not yet, depending on how it spreads further. So far, no oil facilities are involved, so oil is having psychological impact. Physical world impact is yet less. So depends on how it will spread and what will happen to this war, Ukraine and Russia. If this can spread Belarus, if both attacks Ukraine at some point, then the war can spread even towards Eastern Europe. Now we'll closely watch, let's not predict anything. And another heated area, which is not heated right now, is this Taiwan and China tension. At one point, it is possible that this is going to flare more significantly. So this is the geopolitical space where things have changed. Another important area is where we have seen action is China. Though this is bad, China is immediately not bad, actually good. China announced stimulus, this stimulus to boost the economy, and announced monetary stimulus as well as fiscal stimulus coming. So this is a significant push from Chinese side to boost their falling economy. I said China is also my factor. Those who have done my class, you know, China is also my factor, which can cause the global recession. Because Chinese debt debacle and the property market continuous blow up. So these are possible, significantly possible. But so now for China, my focus with this stimulus, it has been easy. To gauge the situation, what I have to do is gauge how the stimulus is working. For that, one part will understand via base metal and Chinese stocks. Another one will have to rely more on hard data, which may take another at least 2 months to reflect in the hard data. Yes, the things are changing. And I'll also be looking at some real-time kind of a data like maritime shipping to understand the trend and how things are getting impacted after this stimulus. So if the stimulus fails, market turns once again lower and Chinese economy data coming back, then China could very much be the factor. Now, geopolitics, what's happening, and this is a very sensitive time it is happening. We are almost moving into an October, and where within almost a month, not a little more than a month, we have the US election. US election is going to be very, very important in this context. Who is going to be the leader that could direct the geopolitics? Whether we like it or not, US is still a major force in global geopolitics in different ways, through its US dollar, through its strength, through its so many carriers, that aircraft carriers that is compared to other, where others have one or two, US has 13, 14 aircraft carriers. So it's an immense military, immense size of the market. So everything, it matters. Now, the third factor that has somewhat diminished, that that risk of interest rate spike, which is related, has to be related with the inflation spike. Now with this war, Iran and Chinese stimulus, if they both put commodities on the upside move, like it has done so far in case of gold, silver, means metals, crude has not gone so far, then once again the inflation may start to come back. And in this context, the Federal Reserve interest rate decision, how it's going to be, it is going to be very, very interesting. But I think Fed is going to be careful and may go for 25 basis points rate cut in the next meeting rather than more 50 basis points, what the market is pricing, especially for December. So this is the main macro situation that we have. Now let's look at some of the macro data if we can. Let's check. So in China, basically, I'll be focused on one of the few data that can give me, I think, more reliable outlook is China real estate. That's where I'm focused on. China real estate data, I'll be closely watching. And in general, I'll be watching the China national housing prices. The stimulus is basically aimed to improve this ailing sector where you can see a steady downtrend and nothing has changed. This, despite COVID, after COVID recovery stimulus, this sector is not just coming back. Somehow Chinese people are not interested in buying the real estate homes. Maybe too much overproduction it has happened. So currently it is not in a good space. This is one of the data I'll be looking at, that the current state is not right. In addition to that, various Chinese real estate data I'll be closely watching. In addition to that, I'll look at Traders Insight. I'll look at Traders Insight and I'll go to maritime shipping data. And maritime shipping data, I'll look at what's happening or going on with Chinese container freight index. Chinese container freight index is cracking down. It was way elevated, no doubt, but this is crossing down is not a positive sign for Chinese growth. It's definitely good, could have been a good sign for say geopolitical tensions coming down. but actually it is not. Geopolitical tensions have actually gone up. So in Traders Insight, let's go back and we think the macro micro in terms of they have included geopolitical risk as well. Geopolitical risk has significantly gone up. The latest one, when it will be updated, you will be able to more visualize, it will significantly gone up. What has been more concern for me this time around, that there are different type of geopolitical threats. Like in 2022 there were, but these were more this geopolitical risk threats. Threats are coming more. But since September 2000, means later part, since the Houthi rebel, Israel attack, what we have broadly seen is geopolitical acts has gone over the threats. Means we are acting on the more than just announcing words, threats. So actions are more. And after this rebel attack, this data, when latest one updated, you will see a significant drop up, move up. So this is one part that is keeping me concerned. The geopolitical risk has significantly up the world, Taiwan, Middle East and North Africa. The level of risk, obviously, as you can see, the level of risk in Israel remains significantly higher. And it is likely to go up further as this latest attack. So this Middle East remains much tense situation over there. And if they contribute to the inflation, then definitely the third level of risk is going to open up. That is the interest rates risk. Now, in addition to the United States, I'm going to show you some data like US employment. We have seen the overall level of inflation has come down. So I want to take a look at the US employment more. And if I look, you can see there has been a clear slowdown in the trend compared to the recent past. Recent past years, there has been a slowdown. And I would like to show you this particular data, that US percentage of states that are going up, where the unemployment rate is rising, is significantly going up. Latest data will probably show further rise here. So these are reaching levels which coincides with recessionary. You can job workers business cycle gap indicator. This is a beautiful indicator that helps to understand the cyclical drawdowns. Job workers gap business cycle indicators, JWGBCI. Household survey plus JOLTS job openings minus household survey labor force participation divided by household survey labor force participation. This is the formula, and this was created by economist Powell. I don't think I'll be able to pronounce this Polish name very well. So this was created by this person, Mr. Powell, and it has been showing a major drawdown. And these drawdowns have historically coincided with major market crash and a recession. You can see how it is dropping. It has been sharp job worker gap is coming down. And from the past also, you can see whenever there have been situations, if there's a drop like this, the US economy has moved more into recession. So we are more probably waiting for further trigger, which is yet not arrived, which will be the one that will trigger all these cyclical events, and we are going to have another major drawdowns. So underlying current जो मुझे market में दिख रहा है, it is not very encouraging right now. and market में थोड़ा correction is a possibility, because if we look at the central bank and Federal Reserve, which is the US central bank, it is currently expected to cut interest rate by another 325 or 75 basis points. 25 point ka 3 cuts. And I think Mark in the latest projection reports, materials, Fed has actually projected 2 more rate cuts, not 3. So market could be slight out of mispricing, and given the current scenario and if the commodity prices do go up, Fed would like to be more cautious than sharply jumping to cut rates. I think for geopolitical situation, US election remains a major important trigger into this. And in case of China, we'll have to look at how closely the behavior of the stimulus in the hard data, in the stock market, and overall Chinese data, how this stimulus impact is having effect. Will it work, or after a certain time it is just fading? So that part understanding will be very important going forward. Now we'll take a look at the upcoming data. Today is a holiday. This week is a very important week. You already know that. I've seen this data. The most important data is on Friday. That is the US non-farm payroll report, NFP report, that you know it. Now, second day, 2nd October, ADP non-farm. China remains in a holiday mode. So once the Chinese market opens up, this will be very, very interesting to see how the behavior of Chinese stocks going on. We can see further big rise, or we may not see, say, further fading. Either way, it will be very, very important to watch. So these are the data comings. Now what I'm going to do, I'm going to take a look at the individual markets. Largely, I look at the global indices, I look at the currencies, I look at the commodities, and I look at bonds through my fountain of gold setup to understand how things are heading. In addition to that, this is my fountain of gold setup. In addition to that, I'll look at the current risk. And current risk देखने के लिए what I need is go to indicators, invite only, under invite only SD Rainbow Wave V2. This will give us the risk master. Select the risk master and apply. And you can see in the daily chart, the drawdown risk has significantly gone up. In 125 minutes chart, 125 minutes chart, 125 minute chart में significantly red, the volatile components one. Once again, the risk master gave early warning, very excellent early warning. And we'll also look at the weekly chart to understand the long-term risk. The long-term risk was only the future times, forward risk, high risk time is coming. Of course coming because it is recessionary cycle. And this too shows the risk of recession getting near. The risk phase has started. So we are already in the risk phase. So any trigger can be that trigger, but most likely we are not there yet. I have some few more triggers left. After that will become close by. Now, once the risk we have understood, the market level of risk has significantly gone up, we will hide the risk master and switch on the Rainbow Asset Master. And we'll also need the SD RSI X. We'll take a look at through the daily chart. Daily chart yesterday clear कर दिया था, you have to exit the S&P 500. It's no longer good. If you remain, you run the risk, and I don't remain. Some stocks I do have. Let me clear up. I do have some stocks, but in a more risk managed way. Yesterday was a must exit for Tesla. Otherwise, if you did not exit, you moved into a loss. You have to move very fast. Those who are with me on this Tesla, you have to book it whenever the threat is coming. And this threat came just before this attack. And this is Dow. Dow has given full exit from the buy side, full exit, because this is I follow, not the setup guide. Setup, we need a full red candle, means full exit, but yellow background, I do a full exit, means short-term trend is neutral. On the buy side, stay on the sideline is my best game right now. Same my best game for NASDAQ. I trade on daily chart, so I will stay on the sideline. I'm not interested into getting into the risk. And this one has actually given a sell signal. So I don't think it's a very strong one, 36% win probability. And it is a strong support coming towards 2175. So even if it drops, I think strong support is likely to come in these area, 2175 to 2171. Next, we are going to look at, this has helped me a lot. Last Friday, I went long into volatility and looking at this. This is the volatility. Today, the volatility is down, which is positive for stocks. Though our market is closed, but other markets are open, that means we can see some correction. Now, volatility last Friday gave a buy signal. So I added some volatility, and on the break also, I added further on. So volatility is basically giving me protection to the downside for my stocks. Now, once I've taken a look at the volatility, let's look at the European indices, Netherlands, correction, Italy, complete failed. Actually, I've gone short on overall Europe, not Italy, but background rate full exit. IBEX, thankfully, I exited. We discussed it last time. It is sharp drop. CAC 40, complete failure, still within range. London, UK FTSE, London rather did better, but it's not a good idea to remain with such small candle. I'll prefer to stay outside. Staying away looks like a very good idea right now. From high risk trade, this is Euro Stoxx 50, European blue chip. It's down. Everywhere the story is broadly similar. A major correction is going on. It's not a short yet, but major correction, staying on the sideline is the best game. You have to know when you have to trade and when not to trade. We discussed about SPGM red caps, and now see the further short-term momentum bearish has come. It's available from, if you look at the right table, you can see ST Momo or short-term momentum is bearish. So it is further exit from these global stocks, SPGM stocks overall. Some of the stocks will anyway go up, it always does, but overall stocks are becoming more and more risky everywhere, and India will see a reflection of that as well. But today, with the volatility a bit on the negative side, this is positive for stocks. A few bounce back does not mean this is the end of the complete risk. Now, stocks opposites are bonds. What's the thing with the bonds? So bonds usually, I originally had exited, but despite the signal not coming, I actually went into bonds looking at yesterday's attack. And overall, if I see this structure, once I have a tight stop. So since I have a tight stop, I thought I'll try. And if the risk goes up, then I'll be significantly gaining, and interest rate dropping will lead to increased price of my bonds. So I was anyway into some bill and some short-term bonds I tend to remain all the time. But this TLT I was not in. This TLT is something new that I got into, looking at this Iran attack. And if the interest rate goes up above 4.13, I'll be cutting it down. So I'll be cutting it definitely down because I'm aware that I'm taking a trade against my setup, which is not against, it has not given a full sell signal. So, but looking at the geopolitical situation, this is kind of small risk. So I decided to try these long-term bonds. Now, this is about the bonds. Bonds are in a range. So bonds kaise karta hai, that will be important. Background has turned red. So bond interest rates going up is working. This is one of our indicator for recession. Looks like no, it's not ready. It is not moving above the level which we want the level to go up. It looks like the move has broadly failing. Now, once it has tried to move up, looks like the move up, after all, it is not working out. It is not sustaining above जो level हम लोग discuss किए थे threshold level, उस threshold level के ऊपर sustain नहीं कर पा रहा है. Once is moved above that level with confidence, that will be a more stronger signal of that underlying current is changing and we are moving more close towards this second phase in the recessionary cycle. So that's about bonds. So this is bonds ke baad, let's look a quick look at the commodities, or let's first look at the currencies, then I'll take a look at the commodities. So currency, I'll start with the dollar. Dollar, I'll look at through the daily chart. Dollar is showing good base formation as the risk has gone up. Risk has significantly gone up. Dollar index, it is showing a comeback. I can't say that I'm yet ready to go pursue this dollar buy, but this is a definite signal. A bit careful on the commodities, but for the commodities, dollar is just one factor. But this dollar comeback and commodity rising, those who have done my class, you know that's not a very good combination and the impact of it can be seen. And if this continues, dollar strong and commodity strong, then it's a bad news, especially for emerging market stocks. Because in such a case, US is basically doing nothing but exporting the inflation. And that is really a bad news. So dollar index overall making a good base. I'll not be shorting dollar anymore. So once this base is done, I'll look for more buy opportunities, but currently dollar is not there to go for a buy opportunity. Then we take a look at the Euro USD. The breakout has clearly failed and it is, I think, will spend some more time in the range. Currencies in the daily chart, I don't think we are going to get some good trades. Some of the buy side is failing. I have largely no position here in the currencies anymore. Those I had through the ETF broadly have been profitable, except that YCS yen currency short, that did not work out. So dollar index is coming back, is not a great news for commodities. So first of all, we'll have to take a look at the commodities. MCX is closed. So we'll take a look at LME base metals, LME London Metal Exchange. So it is a daily chart and we'll take a look at tin is going up, nickel not interested. We'll look at lead no. This is the aluminium. And looks like, yes, aluminium has broken higher in London Metal Exchange and it is heading towards this mountaintop resistance basically. That means aluminium will go up, but the more stronger, I think, in the game is more zinc. Zinc is the one that is super strong and it is heading higher. And so if I have two choice, aluminium or zinc, I'll go for zinc because it is on the buy trend. Aluminium has still not broken the resistance. So that's an easy choice, and that's what I suggested in previous videos also. Looks like overall the trend remains bullish from the LME base metals. Now, once that is done, we'll take a look at gold. Gold is not having a good time. Be very careful. I'll take some money off the table. If you're international, that it will open in the evening. Short-term momentum has turned bearish. Gold can go for consolidation before rising. Now, if short-term momentum bearish, I'm exiting, then I will basically, once a break, I'll enter. Once a new break is happening, 2676. So gold, one can go for further correction, important data coming up. With data ko leke, gold can drop, shake off the retail players, and then go up again. Silver is not good. I'm not interested in silver. Silver is not at all good. ये मैं बहुत बार बोल चुका हूं कि gold मुझे ज्यादा पसंद है because silver has a lot of resistance still, which is has to cover, and gold is at record high. Once again, another easy choice. I've gone marginal long with crude oil, that is through the ETF yesterday, just based on this, and small y because I expect a correction before going further up. So crude oil I've built with UCO, that is 2x leverage crude oil. So let's see how it goes, and with 2x leverage instead of MCX, I'm in a better position to hold the trade and follow through if a correction comes today in later in the evening. Crude will be very interesting to monitor the overall mood of this Middle East sentiment. What's going on? And for China, base metals will basically do that. Natural gas at that same level, nothing has changed. You can expect a break and a move towards this area, but also there is a risk of a failure. It moves up and then it fails, goes for much deeper correction. That is also very, very possible. We will basically want to see what the price does around this flat line area. What it does, how it does it. So that will be very important to go for natural gas understanding build up. But we had a good move. Any natural gas with these resistances approaching, I will do with lower quantity participation. कभी भी किसी का सुन के ट्रेड नहीं करना चाहिए, इंक्लूडिंग मी. दिस इज आई एम जस्ट डूइंग फॉर educational purpose for the learners who have joined me and used this fountain of gold setup. उनको help करने के लिए I do this. Now, listening to others and trade is one of the fastest way to lose your money. Don't do that. Try to build your own method. If you don't have, you can borrow others' method. You can borrow my fountain of gold. But still, you have to trade yourself and trade freely. So that's all, friends. I think we have covered equity indices. We have covered currencies. The majors one, obviously, not Australian dollars and details. And we have taken a look at the commodities as well. Thank you so much for watching my video. Agar pasand aa raha hai, don't forget to give a like. All the best from my side. As always, happy trading.